So guys, welcome back. What we might do is go over in somewhat detail in relation to assessment task 1, assessment or section 2, question 2. You're required to put together a cash budget, and these details will be in your workbooks and your handouts and so forth. So today we're going to look at a cash budget for a period of time, and the period of time we're talking about is May and June. Now in your workbooks you've been provided with some information, and you might want to look that up now as we get started. But let's just go through it systematically, and those of you that are watching from home or your office, welcome, and we'll go through this systematically for you. As we get started too, I'm going to be explaining this step by step, and for those of you that know accounting or know bookkeeping, I don't mean to be condescending or rude. However, if we go through it step by step, that way we can all get a handle on how to handle this particular assessment task. So the information you're provided with is cash receipts and cash payments. And we've got cash receipts for the month of May, which is $120,000 for the month of May. We've got cash receipts for the month of June of $110,300. And subsequently with the cash payments of May of $150,000, and also in June of another $150,000. And when we talk about cash receipts, as the word implies, in everyday language, it's receiving the money. So cash coming into the business, money in the form of cash, not credit, but cash money. So they're coming in, and subsequently cash payments is actually cash going out of the business. So if we think about it and treat it, these numbers and these concepts in that way, it'll take you a lot further. Also, there's a couple of assumptions that are made, and you have these also, is on May 1, 1st of May, there is $40,000 sitting in the balance at the beginning of May. And for some reason, this business has a policy that they want to have a minimum of $40,000 sitting in their account at the beginning of each month. All right, so for the beginning of May, they've certainly got $40,000 sitting there. But wait till we get to June. All right, any surplus cash they have above $40,000, they've got the option to invest in a money market, earning 9% interest. And also, they've also arranged with their bank a line of credit. So if they're short or have a deficiency in their cash, they can borrow money at 12% interest. Right? Particularly this will be important as you go through this particular task. At the beginning of the month, we've got a zero, they've got no money invested, earning 9%, and they've got no debt. Right? So 0 and 0 in relation to starting at the May period. So let's go through this step by step. What I suggest is laying out your cash budget for the month of May and June in this sort of format. And let's just go through it step by step. So we're looking at the month of May first. So what's the beginning cash balance at May? $40,000. And you might want to write this down in your notebooks as we go through, so you can remember it. All right. Plus, for the month of May, we've received cash, haven't we? Cash has come in to the business. Let's refer back to the information you have. How much cash was received during the month of May? $120,000. Thank you. And therefore, the cash now available. 160, thank you. Again, there's nothing complicated with the mathematics. It's how these numbers are treated and communicated in this sort of report sort of format. Fantastic. All right, so then we've got cash disbursements, and disbursements being monies going out, being dispersed of. So not a very nice word, but anyway, particularly when it comes to money. So cash disbursements for the month of May, $150,000. Thanks very much. And therefore, the difference between the money available and the money going out is $10,000. Thank you. Is that a surplus or a deficiency?
Surplus.
A surplus. Thank you so much. All right, so that brings us almost to the end of how we would treat the month of May in this sort of model. However, what did they want to start the following month with? $40,000. Okay, so is $10,000? Okay, so how short are they? $30,000. So they need to get a loan. Yeah, they need to borrow $30,000. All right, which leaves them a cash balance of 40. Thanks. And in this instance, we would transfer the end of the month to the beginning of the month. So we're starting June with $40,000. Wonderful. So cash receipts for the month of June. Go back to the information you've got. How much cash receipts did you receive?
$110,300.
Wonderful. $110,300. And we're talking about Australian dollars here. So cash available? 150. Thank you very much. All right, now here's where it gets a little bit tricky. We're in the month of June, remember. Cash disbursements for the month of June. What was that? 150. You see that? Wonderful. However, let me just stop you there. There's something going on here. Remember what happened in May? They took a loan. How much did they borrow in May? $30,000. At how much interest?
12%.
At 12%. Thank you. They've borrowed $30,000 at 12% and compounded monthly. So let's just do the calculation. How would you go about calculating what a month's interest would be? 12%. How would you do this? Let's talk through the formula. So we've got 30,000 times 0.12, and that would be a percentage. And then we would divide that by 12 being a month. And the answer you'll get, please use your calculators, the answer you will get
300.
300. Excellent stuff. The answer will be $300. So that's 12% of $30,000 divided by 12, being 12 months, 1 month being the month of May. So that $300 was being paid in June. So rather than $150,000 being dispersed, we've actually dispersed $150,000
And 300.
300.
So
Excellent.
it means the next month there will be another 300.
That's a good thought. The next month, unless they finalise it, will be another $300. Correct. Good question.
For 1 year. They will pay
For 1 year.
every month.
Yeah. So in terms of, so that's cash disbursements. So cash in and cash out. So what are we left with here?
0.
0. Thank you. And therefore the business needs to borrow
Borrow $40,000.
$40,000. Fantastic.
They're a spot above her.
Huh?
They're a spot above her.
Yeah. Possibly. Depends, different businesses have different models, and this could be very well expected, or it might not be. But yeah, they possibly are in a spot above them. And really, thanks for bringing that up. When we're talking about business reports and financial reports, it's really advisable to take much more of a time frame in the health of a business financial situation. 2 months is nowhere near enough. You'd be looking at a minimum of 1 year to 2 years in terms of seeing historical data and information, seeing any fluctuations, not only in financial performance and assets and liabilities, but certainly in a cash flow situation. All right. So, but I'm so glad you brought that up. So in this little picture, it's not so good for this little period, is it? But before making any financial decisions, you need to take a much broader and longer time perspective in collecting the data. And also in business, they say cash is king. So if your business model is cash positive, in other words, you're getting the cash money or being paid for services or products prior to delivering the products or services, being cash positive, this could be extremely advantageous. A good example are the supermarkets, where you'll go through the aisles and you'll see the hundreds and sometimes thousands of items that the supermarkets have. You could be pretty well assured, and it is somewhat of an assumption, that a lot of those products on the shelf have not been paid for yet. Woolworths or Coles or whatever supermarket has not paid for those products. And here you are, you pick up a packet of cornflakes, you go to the counter and you pay cash. You pay cash. The supermarket gets that cash. They're cash positive. They haven't paid for the cornflakes yet. What sort of payment arrangements, I'm not sure, but I'm assuming somewhat. Later on they make the payment for the cornflakes. So if your business model can be somewhat structured that way, could be advantageous, as opposed to, say, a service provider like a plumber, who will come around, fix and repair your plumbing, maybe replace a tap or two, whatever the job is, pipes and so forth. That plumber's had to pay for all the expenses associated with that service that the plumber delivered. And what do? Before they leave, they give you an invoice with 30 days to pay. Cash negative, so they're chasing the money all the time. So if you can be cash positive, cash is king, as they say in business. So guys, hopefully this little instructional discussion has helped somewhat with treating this assessment task. Please take a picture of that. I will publish the video online so you can have a look at it later on. And guys, those of you who are watching from home, thanks for watching, and thanks for participating all. We'll catch up with you soon.